Well, welcome to another episode of Breakaway from the Rat Race. And today I have the pleasure of speaking with Will Basta. Will was born in New York and graduated from Arizona State University. After an initial career in healthcare and health tech, Will went on to work for tech startups where he built out sales strategy and marketing teams. Will and his partners saw an opportunity in the e-commerce industry, which led them to create Ascend Ecom, which is an e-commerce automation agency and investment management company. It's the only company in the industry capable of mixing up logistics, wholesale, distribution, and e-commerce growth all in one. So Will, welcome to the show.
Thanks for having me. I appreciate it. Happy to be here.
So obviously this is very different than the kind of like people that are listening to my show normally. And we talk a lot about real estate. We talk about the economy. We talk about the stock market and stuff like that. I was very intrigued by your business, and I know that you're passionate about passive income and helping people achieve passive income. So let's dive in and talk about your company. What are you doing? How many clients you have? How big this thing is, and then we can dive into the passive income part of it.
Yeah, absolutely. I'll sprinkle a little bit about how or why we sort of started in the first place. Everyone's familiar with Amazon. Obviously, they dominate the e-commerce market. Amazon Prime. You have Walmart out there. That's an emerging e-commerce player as well. And about a few years ago, it was already ingrained in terms of e-commerce in general, knowledge about the space, random investments here and there. And there was agencies popping up, and the buzzword was automation. Essentially, companies that would take investors who essentially didn't have time but wanted to be involved in the e-commerce industry and take an investment from them and run and operate an e-commerce business on one of these platforms for them with a profit split. So an incentivized kind of partnership in terms of that. And we actually invested in one of them originally a few years ago. And what that did was essentially just show us how inefficient a lot of these organizations were. They had a great business model that was just ineffectively getting executed. And that's where we really saw our opportunity to take a business model that was broken, refine it, legitimize the term automation, and really build out a company that's pretty much done, flipped around from the way that we were seeing it out there, which is really a focus on logistics, real infrastructure, ethics at the top in terms of the investment that people are putting in, and really do it the right way. And now we're about 32 months in now. We've got just shy of 500 clients. We've got 2 warehouse facilities that are exclusively ours in Dallas, Texas, which again, we focus on transparency. So the door's always open on those facilities for clients to come and visit. And then we have our office here in Los Angeles, which I'm currently at right now. And essentially what we do is a similar thing as what you could mention before, but we just approach the business completely different. Our clients, they come from all different backgrounds, everything from school teachers to retirees, first-time investors to a lot of real estate investors, people that have familiarity investing in real estate, and they pay an upfront initial infrastructure cost to us, and then they come in with working capital, and we pretty much take the entire business from A to Z for them. We build, operate, and scale an Amazon or Walmart business for them, and we do this leveraging our infrastructure, our team, our data, our softwares, etc. And then moving forward from there, the profits, that's sourcing products, that is prepping packages, that's doing everything from Amazon Prime businesses all the way to directly sending products to the end customer. And those net profits that are made on that business, we take a portion of that as essentially our profit split, depending on the tier that client invests in.
So are you replacing the FBA model, the Amazon FBA model, which is fulfilled by Amazon, or?
No, so we build Amazon FBA businesses for clients. We essentially do a hybrid, but in order to do FBA properly, you can't just send a product randomly to Amazon's warehouse. So when you buy something on Amazon Prime and you see those Amazon Prime trucks driving in everyone's neighborhood, most of the products in those trucks are not actually owned by Amazon. They're just, like you said, fulfilled by Amazon FBA, right? Yeah. So I'd say 60 to 70% of them are owned by third-party sellers like our clients. But in order to get it to Amazon's warehouse, it's a lot more complicated than people think. You start a new Amazon business, you have limited warehousing space, Amazon doesn't trust you. You have to essentially package it a certain way, prep the packaging a certain way. There's a lot of factors that play into it. and go on and on about that. So on the FBA side of the business, our facility and our supply chain and our warehouse, we're the ones that are sourcing all the products, but they run through our warehouse first in Dallas. And twice a day, UPS comes, picks up, I'd say thousands of packages, hundreds of boxes with packages in them, and sends those to an Amazon facility, which then distributes them out to an FBA warehouse nationwide, depending on algorithmically what those product or where that product should be placed based on a 2-day shipping time. And then we also do fulfill by merchant. So we want to make sure we're mitigating risk across the investment and not just focusing strictly on FBA or strictly on FBM. FBM is us sourcing products the same way, but they're actually getting sent directly to the client or the customer from our warehouse and not having Amazon in between.
So you have 500 clients right now. And then, so how much would you say the volume of business is for these 500 clients? How many millions of dollars is that?
I mean, again, in terms of the actual growth, so we've had a lot of substantial growth over the last year so far, but last year, at this point, not this point last year, but last year in terms of overall revenue was 30 million in revenue, but our client base we doubled in terms of staff, warehouse, all that. That's around 100 clients, 150 clients at that point last year, some of which started in December. There is a period of time where it takes to scale up. Obviously, your 80% of your first year's revenue is made month 6 to 12 of your first 12 months, not your first 6 months, obviously. So there's a building block phase in general. And again, it is all over the board. What's going to dictate the revenue for all of our clients or for each client specific store is going to be their working capital, because we're still leveraging their capital to purchase products. And the clients with deeper credit limits and credit lines, which you can expand and get there eventually, they're the ones that are actually in year 2, we can pump more into their business and it can grow at a substantial rate. At the end of the day, the way we like to sort of average it out, and I'm not trying to sort of beat around your question, it's just there's just so many. It sounds like a political answer, but there's just so many differences on how every client approaches their business, and we can only do what we can do. And if they don't provide us a certain amount of capital, that's going to handcuff us to a certain degree. But if we want to average it out, our packages, we have some clients that invest 7 figures with us, and that's portfolios of stores. But per store, it can be as low as $20,000 up to $40,000, depending upon the profit split with no add-ons. And that break-even point, say you invest $40K, your net profit of $40,000, that break-even point is roughly around 12 to 14 months, conservatively.
Okay. 12 to 14 months for break-even. Okay. So I feel like we need an example. Do you have an example of a customer, kind of how they got started, like really with an idea really, and then they said, okay, well, I want to go, or I want to use your services. So do you have an example like that of a client?
I mean, I firsthand brought on our first 100 clients, but I haven't really sold anything. We have an entire team for that now. Specific examples, again, all different backgrounds.
It could be a made up one, kind of like but
at the end of the day, I mean, there's clients who have zero experience in this, right? So I'm going to take an example of that. So, for example, Gary, I can remember that he's actually a teacher, and he wanted to get involved he's from Indiana. I remember this because I had a pretty deep conversation. It was his first real investment. He didn't really invest in stocks in the past or anything, but he buys off Amazon all the time. So he came across one of our ads, and it was really intriguing to him. So let me tap into this industry. I didn't know you can be involved. He thought all Amazon products were owned by Amazon, right? Not that you can actually be profiting off all the spending that's going on there regularly. So he came in and he essentially did a $30,000 tier, which that's a 60-40 split. 60% of net profits go to him, 40% go to us, right? So that actual specific profit split at that time, what we sort of estimate is we want you to be able to, by 6 months, have somewhere roughly around $40,000, like where you're at with your upfront investment. You want to somewhat match that. So not 40,000, be 30,000. So you invest $30,000, your working capital by the 6 month when we're ready to scale should be roughly matching that at minimum. When I say working capital, credit lines. And that's for us to be able to get you to that break-even point in that 12 to 14 months. He's actually not 12 months in yet, and I don't know exactly where he is, so maybe this is a poor example. But I do know that he did start to hit stride somewhere around 6 months in terms of consistent daily sales upwards of $1,000.
Mm-hmm.
And those kind of sales come in at different points for everyone. We have some clients that will hit their third month in, some clients will hit their 8 month in, and what actually is success to clients will vary. But what we want to get you to on your second year, and where 90% of our clients that actually have this working capital get to on their second year, is their
Yeah.
first 5-figure monthly profit. And that is actually in a cycle, when I say monthly, 30 to 45 days, netting over $10,000.
Okay.
And so that's the true goal here. It could be the 23rd month. It's sometime in your second year. And again,
Mm-hmm.
that's going to vary. So.
Okay. So Gary put $30,000, let's say, and does he have to come up with a product, or he has a product idea already, and he said, okay, well, I want to
Oh
sell
yeah, sorry,
this
I forgot those.
widget.
That part of that. So his idea was not passionately, let me get into e-commerce. It was, let me just make some money off this industry that is internationally now it's about to tap 5 million or 5 trillion.
Yeah.
And so no, there's all the responsibility goes to us. He wants a professional in the seat to run and drive the entire business. What we're selling on his store, if I were to look it up right now, honestly, it's everything from potting plants to Barbie dolls to, I mean, shit, you name it. It's random. Automotive parts. It's across the board, a generalized store. We're going by data on what's going to make the most money,
Okay.
not by.
So you're deciding on the
we
products that's
we
going to be in the
decide
store.
every single thing that happens to the
Oh,
store.
okay, okay, okay.
They are strictly just a financial driver. So you
Yeah.
come in, you invest with capital. We take
Yeah.
that capital, we make it work, and we run the
Okay.
entire thing.
Okay. Oh, I see. I see. So what we have done, we have some experience with the Amazon thing. We did some
Yeah.
arbitrage at one point. So we were kind of like looking at different what products were being sold and stuff like that.
Yeah.
And we say, okay, well, we can sell that same products. We know where they're getting it. They're getting it from Alibaba. We would buy it, come in here, and
Yeah.
then sell it ourselves. So that was
Yeah.
one part of it. It was okay. I mean, but it was very dynamic.
Yeah.
It was really a price war. As soon as you did that, then you end up into a price war to the bottom, and then you had to monitor that quite a bit. So.
And then you also have to worry about, if you're getting from Alibaba, you're getting it overseas. So there's supply chain delays and all of that. I mean,
Yeah, well, now there are, but when we did it, there was like it was
yeah,
very
you could
quick.
potentially
They're
do it
pretty amazing.
the
Yeah,
Express, Alibaba,
yeah.
AliExpress, stuff like that. And
And you had
that is
you had a minimum amount that you had to order as well. There was a minimum order amount. Sometimes it was
the
a huge
MOQ,
amount, Yeah.
MOQ on that. But that is, again, it's a different time on that
Yeah.
end, because when it comes down to the competitive landscape and how this works and why people invest with us. I mean, you look at Amazon, you'd say, hey, is it too late? Am I too late to invest in this?
Mm-hmm.
You have somewhere between 2 to 3 million sellers in the US, North America
Yeah.
on Amazon. I can slice that into a third and
Yeah.
say who's actually competitive to Ascend clients, because a lot of these people are selling one product, they're selling out of the garage. They don't have the scalability of having their own exclusive warehouse facility. They're using a third-party warehouse. They're
Yeah.
buying all this stuff internationally, taking
Yeah.
forever to ship, all of that. We are a wholesale distributor as well. And
Yeah.
the fact that we have our own prep center means we're not slicing into the margins because we're doing it all in-house.
Yeah.
And so we're doing day of arbitrage, and we're also doing volume discounts, because we actually as a company are also purchasing from a wholesaler that we have a relationship with. We'll purchase sometimes up into per month in the 7 figures. And when you buy that much from a wholesaler, what you're getting from that is massive volume discounts.
Yeah.
And those are off multiple SKUs. And then we have clients buy directly from us at cost.
Yeah.
They're getting one or two SKUs. They're getting the benefits as if they dropped $1 million from the wholesaler, but they're only buying directly from us, and they're getting that volume discount. And that's where you can actually undercut competitors on Amazon, and they're going to lose money if they try to do a price war with you, because they just don't have that capability.
Yeah,
that's one example, obviously.
Yeah.
But
yeah, that's a good point. And the thing, what I remember about this business, it was pretty data intensive. I mean, you had to monitor your store constantly on Amazon, and you just like, it was just incredible. And there was a lot of data, a lot of things that you had to monitor. And even picking the product was not easy, because then you had some tools that you would go on Amazon and say, oh, this is how much money they're making a month. And then you kind of like, okay, where can we get that product and stuff like that. And it was pretty intense.
It's complex, and it only gets more and more complex. And
I'm sure it's more complex now. Yeah.
Absolutely. I mean, there's multiple softwares out there that say they're the best. We use 5 because at the end of the day, all of them have some things that they're lacking. And so we mitigate risks across how we're sourcing the software. And then we also just have our own manual scrubbing techniques and our own access to certain wholesale distributors and wholesalers, which helps us sort of get there. But yeah, everything you're mentioning is still part of the game right now, and no one has time to do that. So how do you invest in e-commerce? But the commonality between all of our clients, whether they're a teacher or someone in the financial sector or real estate sector, they don't have time to dig into this stuff. But they want to diversify out. They want to do an alternative investment, something that's not real estate, that's not stocks, that's not your basic, that's not as risky as crypto, obviously, and stuff like that. So at the end of the day, and that's at the end of the day, that's where we sort of come in. We look at it as a sustainable investment. It's not just about passive income. It's also about building. This is digital real estate, because these digital assets, the way that we build them out, we're not breaking any terms of service with Amazon. We're not doing kind of short-term plays, drop shipping, any of that kind of crap. We're building a business that its valuation is only increasing, and it's appreciating over time in value, and it becomes something on the open market you can sell down the line. And so we look at the long-term picture, not just, hey, how much passive income can you make the first year? It's let's cash flow. Let's also make sure that the clients that have enough money, they buy two businesses, so they have the opportunity to flip one in 2-3 years if they want, sell it, and then also keep one for passive. So you have to look at it as also an asset as well, not just your passive income game that's going to last for a year and then drop out.
So that store, is it only on Amazon, or is it also on, let's say, eBay, or is it you create a website and you do ads and stuff like that, run ads to drive them to that website?
Right now we're primarily focusing on the two major third-party platforms, which is Amazon and Walmart. So when someone comes and invests with us, and if they're investing for the first time ever, we focus on Walmart or Amazon first. When someone buys a portfolio, they do an Amazon and a Walmart. Walmart is could be a whole other podcast, but Walmart, as you know, they're brick and mortar. They're a huge retailer. Amazon just surpassed them, but they were number one up until last year. Retail's worldwide. They actually were not pumping money into their e-commerce capabilities for a while. A couple of years ago, they decided to open up their doors on that. And so now there's still under 200,000 sellers on Walmart. And obviously there's brick and mortar marketing all over the place. So it is, I say that, but I also say that with caution, because yes, invest in getting a Walmart business, but their tech platform is way behind. Their seller analytics are way behind. They have all this stuff that Amazon is light years ahead. Supply chain, a lot of factors that make Amazon superior, but you're investing early on. So if you are aware with, that's why we never guide a client to invest with Walmart first. You need to understand e-commerce first and see Amazon build out. And then you can get a little bit riskier with Walmart in terms of just how their platform is run and how they are as a company right now in the e-commerce sector. They're just wishy-washy. So it's got a little more volatility, but it's got great upside.
So the other obvious question is, okay, so why are you doing that? Like, why don't you just run your own store? Why don't you just get the capital and then build your own capability?
There's a lot of ways I can answer this. I'll give you the first sort of basic answers. There's three main reasons. I mean, there's the reason of hey, having multiple on one of those two platforms, more than two, is technically difficult to do and against their policy under one. You need an individual to open up each business, right? And the reason why you want to have more businesses is because every business has a different trajectory and every business is selling different products, right? And so at the end of the day, it's the same thing as talking about diversifying your regular financial investments. You want to diversify within e-commerce as well. If you have the finances and the people that come with us with deep pockets, we don't say put all your working capital into one store. Get a portfolio of these stores, right? And we can run slightly different strategies on each of them, right? And that mitigates risk across all of them because you are on a third-party platform, and you can have different growth trajectories and different private label products and different brands and just different ways to expand upon your e-commerce investment, right? There's that. And then there's what I'm passionate about, which is the concept of us actually building an investor network, which I think is priceless. And the fact that we have such a diverse pool of people investing with us. And we haven't gotten to this stage yet. And where I'm going, this might be very, very, very far ahead, but I like the idea of bringing value to clients from all different backgrounds. And I think that's something we're going to be able to leverage down the line. And we're also going to be releasing a lot more things as we in the digital space. If you bring value to a client once, maybe they'll invest with us once, and that's fine. But they will come to us if we have another offering down the line. And that to me holds a lot of value. And then it's also the idea of potentially getting, having some kind of networking event down the line with all these people from different backgrounds. And that is very far down the line. But I look at the big picture in that sense, and I look at this as a true network. And to me, that's very exciting.
No, I think this is good. I think this is very, very good idea, and have kind of like a mastermind of e-commerce store and stuff like that, and bring network, bring everybody together and say, hey, share successes and stuff like that. I think that's a fantastic idea. So one of the things that you were saying, I think it's, if I can paraphrase, is that the reason why you can't do it on your own is that you couldn't just open one store that you called Ascend and with your name on it and then sell 50,000 products. That would be, they wouldn't allow you to do that.
You technically could sell whatever amount of products as you want, but each store is going to have just algorithmically on the platform. The more stores you have, the more ground you're covering. So the more beneficial it is regardless to have more stores that are successively healthy and that are ingrained and trusted by Amazon. You're just, at the end of the day, you cover more ground. It's just a smarter play. And we could technically open up, we could get age businesses. And I mean, to scale to 500 would be such a complex venture that'd be sort of pointless. Now we have the ability to partner with people, use them as an individual to open up their own business. They own it outright, but we know how to grow it and scale it. We use their capital, and then we take a percentage of that actual success, and then everyone wins. So it's a true partnership in terms of performance-based partnership. And we can avoid the complexity of trying to get to 500 stores that we own ourselves, which is a ridiculous feat.
Well, you almost have enough employees now. So every employee has.
Right. If we I mean, you can look at it that way as well. I mean,
every employee, you have to open a store. That's
yeah.
So I also want to go back to Gary. So Gary put this $30,000, and then so $30,000, you're going to build a store for him. It's going to be, I think at that level, I think you were saying that this would be kind of like Amazon only and stuff like that. If you put more money, and the split, I think, is different, the split in profit. And you're saying that after 2 years, you expect Gary to make like 5 figures in monthly, like $10,000 a month in profit or revenue.
So Gary specifically has to have, in order to get to that point, you need to have the clients that are doing that they have somewhere roughly around $70,000 in working capital and credit lines, right? Okay. I'm not sure where Gary's at specifically at this point, but we teach clients how to acquire business credit as well. And that's a huge factor here in terms of you getting to that level and getting to that point eventually. If you're looking at margins that are roughly, again, it's going to vary per product, and this is sort of a slightly big range, but between 15 and 35% net margins after all said and done per product. It's going to vary based on what you can spend monthly, because we're cycling it. We try to push through products within 30 days of them getting into the warehouse. It's hard to really, we have financial models that come out, but I'm never a big believer in it because it's very difficult to say, hey, this is going to sell in this amount of time. We try to push everything out at max 45 days. But we can't control the exact time frame of when products are going to cycle through. You get paid out bi-weekly by Amazon. So your 30K credit line could potentially be 40K in spend in a month, depending on when you're getting paid out and when you're paying it down. So there's all these complexities that involve where you can get in terms of your working capital. But someone has the right working capital. Someone has 70K in working capital. Year 2 is when things take flight. So year 1 is a building year. Let's get you to break even. We look at benchmarks. Let's get your initial investment made back. Number 1 goal, let's build out your store in a healthful manner. Let's get traction on your business. Let's get it flowing. Let's develop wholesaler relationships. Let's get your business established on Amazon, and let's get your investment made back. Year 2, hopefully at that point, you're fully in the clear on that investment. And that's when we really go into scale mode. Now let's double down on us sourcing products. Now everything is a net positive in terms of what you're making, right? And so that's when things generally take flight, is year 2. So there's obviously a patience aspect in the year 1, but if someone has that ability, there is at some point in month 12 to 24, there's going to be a starting point where there's going to be your first month, which is your first month out of a 12-month period where you will actually hit that 6 figures, right?
Yeah.
You're going to hit that 6 figures in profit in that 12 months. Not saying from 12 to 24, but it could be month 18 to month 30 or something along that point. And these are our goals. Like I said, this is a two-way street on this investment. We need to make sure you're providing the right capital, but we have the resources to do that, given that is met.
Yeah. Yeah. I'm trying to kind of like figure out kind of like what would be an expected kind of like cash on cash return for that particular investment. If you were, let's say, to, even if you think of it as a real estate investment, like as an apartment building or a rental property, you put some money down, you get some rent, you get some net cash flow, and you sell it after 5 years. What's the cash?
Let's just look at your, let's just say a client's 24 months in, right?
Yeah.
The clients that we have that are over 24 months that have that kind of capital, on average, the best month we've ever had for a client, I'll start there, that I'm aware of, they made just shy of $30,000 net profit in a month.
Okay.
That's in 1 month, right? We took a percentage of that, obviously.
Yeah.
So they keep 70%. They keep 70% of that because this is a handoff investment.
Okay. So they end up with 21K, and their initial investment was 70K.
Their actual working capital is somewhere in the 6 figures that we're pumping into products. Their initial investment was 40K. 40K gets you a 70-30 split, right?
Oh wow. Okay.
That month happens sometime in year 2. I don't know. Frankly, I don't know exactly when, but I remember seeing that number and be like, oh shit, that's the biggest month we ever had with a client. That client currently, right now, sits somewhere hovering around 23 to 24K in monthly net profit. That was a huge month. It had something to do with generators and a hurricane in Florida and us having generators on their store. So there's a slight bubble there. We could get back up there, but this client actually now has a portfolio of stores with us. So he is investing his capital across multiple businesses now, and he's okay with keeping that hovering around that 20 to 25K monthly, right? While these other stores are growing up and getting to that point, and they're actually gaining value and appreciating as an actual online commodity. And so that's the smartest way to approach it in that sense. That is the biggest, obviously, the month that we've had. If you look at clients that are in that 18 to 20, 18 months or further, and they've got to that good peak and they're not pumping, there's a point where we have a conversation with our clients where we say, hey, you should look into expanding your portfolio, not just pumping all of your money into this store. Because there's a point, not where it plateaus, but where it's going to the growth is not the same. And you're better off ROI wise opening up a second business with us, because that's just another store.
That was something that I found interesting. I mean, why start another store? Is it because Amazon is trying to help the new stores? They say, oh, this is a new store, let's help them out.
It's because there's a huge market for these stores in terms of selling them. Like I said, it's real estate. It's real estate. There's a massive market. I've flipped over 10 stores so far of myself. We currently own 4 internally. There's a massive market for ones that are not even actively selling, based on their history, based on their revenue, based on what wholesale agreements are in place, based on the branded private label products that they have in place. There's a lot of factors that play into it. But the point of having a second store is opening up the capability for you to be able to actually, you're malleable in terms of what you can do with these businesses. You can sell one if you want and not get rid of your passive income, is my point. And you also, on top of that, if one store is a wholesale based store, that second store, we can focus deeply on private labeling. And private labeling, I'll touch on this lightly. That's when you take something, for example, let's just say this iPhone charger. Electronics are the most oversaturated items on Amazon, so don't take this to heart. Just using an example because it was in front of me. But you take something like this, and we negotiate with manufacturers. We get a low cost per unit, and we brand it to that client's store. It could be cookingware, whatever. And then you can charge. There's the perceived value aspect. You can charge $49.99 with it for this, because eventually you can get to that point once you've got enough reviews, et cetera, because this brand is worth that, right?
Yeah.
When someone will spend that, and then someone will buy the same product for $9.99, but you're able to run. My point is, we can focus a strategy on the second store and private label, and we can sort of mitigate risk and change fulfillment and product strategies on multiple stores while you're actually just gaining 2 assets.
Yeah, we did actually some private label on some wine it's kind of like a wine cover for traveling and stuff like that. So it's
Okay.
with your, and we did the branding. We went to
Yeah.
Alibaba. They built all of that for us, and then they
Yeah.
shipped us like a million of them, and then we sold. We sent them to Amazon for FBA and stuff like that.
Yeah.
But what we were, and this is where I think you add a lot of value, a tremendous amount of value, is on, keeping that store going, keeping the sales going, all the analytics, all the logistics and stuff like that. And this is something that we didn't have. And
Yeah.
it was actually, even though we thought it was a good idea, the dynamics of the market, like when we tried to sell, then the other people that were also high had these wine container kind of thing,
Yeah.
the wine bags. Then they started dropping price. Then we kind of like drop price, and then we kind of like boop, boop, boop,
And then
boop,
that's an
went all the way
entire
down.
thing.
Yeah,
It
yeah,
becomes
and
a
it
headache at
was,
that point.
yeah,
And it's like
yeah,
you don't want to be dealing with that shit
yeah,
when it's a side thing, you know what I mean?
yeah,
And
yeah,
that's where we come into play. And also, like, I can't stress this enough. The fact that, like, say there's someone who is running their own Amazon business, right? And
yeah,
they're doing FBM, FBA. They also, most of the time, they're actually, sometimes you can get it prepped ahead of time from the supplier, but they're actually sending their products that they're buying and they're sending it to a 3PL center, right? To get prepped to send to Amazon or to send to the client. That
yeah,
third party logistics center, that warehouse is getting used by hundreds of other different people, whether they're
yeah,
Amazon sellers or not. There's zero prioritization and they're
yeah,
slicing into the margins because the turnaround time is like 2-3 weeks and they're charging $2-3 a package to prep it.
wow,
We don't have any of that.
yeah,
This is all, you're an Ascend client. It comes to an Ascend warehouse. It's only used by Ascend clients with all Ascend employees with a wrapped in price. It's a
yeah,
flat fee. And we're 10 minutes from an Amazon logistics center. And
okay,
so, like, you're getting an infrastructure and a whole logistics company under your umbrella
yeah, yeah,
of your
yeah,
investment. There's
yeah,
no outsourcing anywhere in how we built this business. And that's why we came into it, knowing that every automation company is outsourcing their entire process, which
yeah,
is not focusing on sustainability or longevity in the long term. And we knew we could switch that around. And it's a simple thing,
yeah,
but it makes a huge impact on the bottom line of the business and the
yeah.
trickle down effect on the client's outcome.
Oh, I see. So then, yeah, so you package this, and then and then you say, okay, well, there's like 10 that goes to John, 10 units that goes to
Well,
Bill, 5 units that goes there, and then
it's actually per client though.
per
So
time.
we
Okay,
don't, yeah. So we're not cannibalizing on any, and no one's selling
okay,
the same products. But
okay,
let's just
okay,
say John, Jane, and Jimmy, they get their products get sent in.
yeah,
They get sent in from their
yeah,
capital. Someone
yeah,
selling brown shoes, someone selling water bottles, whatever it is.
yeah,
They're obviously under them. They get scanned in our software, and then they get prepped. We use a FIFO system, first in, first out. So as
yeah.
products come in, our team goes down the assembly line,
Cool.
breaks them down, throws them in a poly bag,
Yeah.
sends them off to Amazon, and or the actual customer if it's an FBM product. So we're
Okay.
doing that whole supply chain internally.
Wow, that's great. That's very good. I think that saves a lot. So yeah, so you handle a lot of that. You handle a lot of the whole management of that store as well, which is a
Yeah.
big one. And the market is, I remember the market is very dynamic. I mean, we did a few business. We also had like a gourmet sauce company as well that we were
Okay.
selling FBA Amazon, and that didn't do very well because the cost of shipping was all glass. The cost of shipping was ridiculous. So we're basically
Yeah.
subsidizing sauce around the US.
Yeah.
But instead of going there, let's just talk about kind of like someone out there is listening to you, Will, and then they say, "Hey, I want to do this. I have $30,000 or $40,000. I want to do this business. How do I get started?"
Yeah, absolutely. So you go to our website if you want to set up a call. Our sales team is not salesy. It's extremely educational because it is a partnership. That consultation call, there'll be a set of questions, takes under 2 minutes. Get set up with a call with us. We just want to learn about your background, why you want to invest in this industry. We'll explain the business model. If it makes sense to continue the conversation, we'll go from there. Our website, we actually just relaunched a new website. So it's got a lot of cool information on it, publications from our company, Forbes, et cetera, we've been in. So there's some cool stuff on that. Podcast links like this will be there. It's www.ascendecom.com. That's ASCENDECOM.com. Then obviously our social channels, we post almost every day on Instagram. That's Ascend_Ecom. That's at Ascend_Ecom, and then our YouTube channel as well. So that's the best place to actually get started. After that call, things work out, and then we roll a process out from starting to getting live. It's about under 30 days. From signing to going live is slightly under 30 days, and then we launch.
And you tell me which products I'm gonna get, which,
We
or I give you
you
a
have
theme.
visit. We just moved to ClickUp, so everything is consolidated under a whole software that's got communication channels to our team, your store managers,
Yeah,
what products are getting bought. You fill out a form on what your working capital is the first 30, 60, 90 days,
yeah,
where they are in the warehouse, and then you have access to your Amazon seller account, and you can see these products go active. If there's products you don't want to sell for some certain reasons, we can obviously not source certain products. Some people are particular on certain things. We have some clients that are big on the environment. They don't want to sell anything that's plastic. Completely understandable. So we can make those alterations based on certain things. Other than that, though, it's you say, hey, I've got 20K I have to spend on products the first 90 days. We
yeah,
work within what you provide to us, and you'll see it sort of play out from there. One thing we're not doing is if someone has a 20K business credit card or a credit line, we're not just dropping 20K on one product like that in the
yeah, yeah,
beginning. It would be not wise to do that, and it's also it's just not smart in the first
yeah,
place. And so we have companies that we partner with in the wholesale side that have very low order quantity limits, MOQs. So
yeah,
we start out with purchases of 500, 2,000, and we spread it over the first few weeks. Because
yeah,
as those products come in and they start to sell and your store starts to get traction, you want to make sure you're not maxed out on your card, and you'll get paid out at an incremental manner from Amazon in the beginning. They're a
yeah,
little weird as a new
yeah,
seller, as you're probably familiar with. They don't pay you out
yeah,
directly what they owe you in the beginning. They like to hold your
yeah,
money. And
yeah,
so we don't want to put clients in any kind of tough position. So we strategically will play it out in a certain way. But if you are a client that has certain kind of, like, again, you're the financial driver, it's your business, you own it outright. You let us know what you're willing to spend and
yeah.
how you want to approach the business, and we can always iterate as things expand.
Okay. And then and then so I can basically pick these. Do you have a list basically of things that I can pick in terms of products, or otherwise, you're gonna pick yourself, and
It's
or I
it's
can.
lit. It's honestly, it's not even. It's on. Most people come in here and they're doing this for this is a money driving investment. It has nothing to do with what we are. I'll
Oh,
give you an
okay.
example. Yeah. So like people come in with passion projects,
Yeah.
and that's just not what this is about. This is about
Okay. Yeah. So you just
us
say
selling what's.
do
Yeah.
whatever.
This is going to make you money. I mean, you can't. A lot of our
Okay.
clients are selling diapers. If you don't want to
Okay.
sell diapers, let us know. But
Yeah. Yeah.
my
Yeah.
point is, we are selling all over the map on what we
Okay.
know we can make money off of, and that's the important thing for this investment. When we
Yeah.
get to private labeling, yes, you might have some choice in terms of, hey, I want to go do something in the kitchen. We can narrow it down a little bit when it comes down to sourcing private label products. When
Okay.
it's wholesale, barbecue sauce to Barbie dolls, like it's everything.
Okay. Yeah. So you would basically, yeah. So it's everything, or I would say, you know what? I don't want to do plastic. I don't want to do vape.
Yeah,
I don't want to
process of
do.
elimination. If you don't
Yeah.
want something
Yeah. Yeah.
sold, then that just let us know we can't sell,
Yeah.
and then we'll just run with it from
You
there.
just do whatever. Okay. And
Yep.
then, okay. And then if I want in the midway, I say, oh, this is fantastic. I want to double my money. Do I add up on top of my stores, or do I just start another store after that?
Depends on where you're at. It depends on where your store is at in terms of trajectory. How we'd have to do an assessment. We'd have a
Yeah.
call with one of our directors and say, hey, this is where it's at right now. This is what your store package currently is.
Yeah.
And then what we'll do is we'll say, hey, it makes sense to add private label to this specific store, or it makes sense to open a Walmart business. With this success here, we can cross sell some of the same products you're doing well with on your Walmart store as
Yeah.
well. And
Yeah.
you'll have higher margins on Walmart, just a little bit less foot traffic. So
Wow.
it depends on the situation.
That sounds great. I mean, this is really truly hands off. We give you a
Yeah.
bunch of money, and and then you give us some money back.
And one thing I do want to mention is we actually guarantee the investment. So it is
Okay.
secure in the fact that you invest 40 grand with us. There's a contractual guarantee that at minimum you make that back, or else we'll buy back your business for the difference in what you didn't make. So if you made 30 grand, it's a 24-month guarantee. Most people break
Okay.
even in half the amount of time. Our term is 24 months. People ask, why isn't it 12-month guarantee then? Because it's the way we're lining up our guarantee with and we also need to make sure that there's flexibility in what people can spend, because some people have less credit limits in the beginning and we just can't customize these contracts. But point is, if for some, this has never happened to us, but if for some reason you've only made 30 grand net out of
Yeah.
40 grand in 24 months, we'll pay you
You're gonna give us the
$10,000.
difference. Wow, that's
Yeah.
amazing. That's
Yeah.
absolutely amazing. So
Yeah.
risk-free,
Yeah.
and you're guaranteed to make money.
Yeah. I mean, I every business has its risks. So I hate to say risk-free completely, but it is a secure investment. We
That's
are
pretty good. I mean,
100%.
The only
securing what
risk you
you invest.
have is that within 24 months, you're not making money. You're making zero.
Yeah, you're
You
breaking
break
even
even. You're
essentially.
breaking even.
And if you bought product, and we can liquidate product out. So if you have 10K of
Okay.
sitting product, and that always comes up in question,
Oh,
we'll
good.
either
Yeah.
buy that back from you,
Okay.
or we'll zero out the inventory and you break even on the product.
Okay. Yeah, because I don't want to have like 1,000 spatulas and I don't
Yeah,
need I don't need
yeah.
diapers. So
And
you
also,
know.
we're also not bullish on buying a bunch of shit that's not selling. So we rarely come into that. At most, you might have 3 to 5K of something that ends up being a dud because Amazon came in with their analytics and undercut us because they're $1 billion company.
Yeah,
and then we just zero out the inventory. You break even on it. Margins are 1%.
Yeah,
You know
that
what I
was
mean?
kind of my one of my other questions is like, Amazon they're seeing what sells, they're seeing everything, and they're doing their own products right now. So what are the chances that they're gonna go and come up with their own diapers and spatulas,
Yeah,
and then you're out of the market?
they are. And I wish I read this 2 weeks ago, very, very briefly. It was a headline my business partner sent me. They're actually reducing their Amazon Basics line. So they're in some battles right now about monopolizing the industry for third party sellers too, legally, federally
Yeah,
too. And they've decided to reduce a lot of the stuff that you just mentioned, or at
yeah,
least begin reducing it. That being said, yeah, our biggest risk in the industry is not someone else undercutting us, it's Amazon, right? So
yeah,
it's
that's right.
fast paced. That's why we're good at what we do, is because we move really fast on our toes when things happen and things come into play, and why we're sourcing different products. Yeah, there is that 10 to 15% chance that we'll run into a product that we'll source and Amazon will come in. And like I said, you're not going to lose money on that. We'll
Yeah,
break even on it, right? But the way that our team actually does this product sourcing, it's not just about, it's not just about competitor. Well, there's a lot of factors. There's competitor inventory levels. So are they
yeah,
running low? Does Amazon have anything in there at this point? And sometimes with timing, you're fucked. Sorry for my French, but you just come in at the wrong time, and that's
yeah,
just pure bad luck.
yeah.
But most of the time, are they selling? How many competitors are there? Predictive data, historical data,
Mhm.
a mix of all of that,
Yeah,
and then store health. The competitors that are there, do they have 2-star reviews? Do they have 3-star reviews?
yeah,
So
yeah,
all these
yeah.
things sort of play in
That's true
algorithmically of
too. Yeah,
like,
this is another thing too you have
of
to
why
think
can
about.
we come in
Yeah,
and take this product and become the
yeah,
lead seller on it, but
yeah,
also don't be so bullish with your initial purchase inventory,
yeah,
because if you are too bullish and then Amazon comes in, then you are stuck with 30K of inventory, right?
yeah,
Which you have to zero out. So
yeah,
we start in increments and we
yeah,
build confidence in our investor and also in the store, and
yeah.
then we sort of go from there.
I have two more questions.
Yeah.
One of them is that is there any seasonality? Like, is there a better time for me to come in? We're approaching, let's say, Thanksgiving, Christmas.
Yeah.
Is this a good time right now, or should I have started in March where nothing's happening?
Yeah. So you want to, obviously Q4 is the biggest time of the year.
Yeah,
January, February, the slowest time of the year for most products, not for some of our product lines. It sells the best, like supplements and stuff like that. Because
yeah.
everyone, new year, new me, a lot of like
Oh
nutrients
yeah,
and stuff will sell in January and February. At the end of the day, in order to really capitalize on Q4, you want to be 3 to 4 months in, right?
okay,
To fully capitalize. But it's not saying, oh, wait to invest in January. But
yeah,
ideally, if you had the choice, you would invest in the spring, have a
yeah,
ramped up store going into Q4.
yeah,
But if someone were to come in and invest now in September, they'd be live in October and they would still have a big bubble boost of their first 3 months, given
yeah,
it's Q4. But that being said, established stores do better in Q4 time. Also,
yeah,
there's inventory limits that Amazon puts on you as a new seller.
yeah,
But it's sort of, I'm giving you a great answer because it's never a
yeah,
bad time to start. But yeah, ideally, you going into the highest sell time of the year, you want to be an established store. You'll just
yeah.
do better overall.
Okay, okay, okay. Actually, I lied. I have two more questions. The other question is that Gary, maybe he wants to be more involved in this business. He
Yeah.
wants to do Google ads and drive people to his business and stuff like that. Do you recommend that? Is this something that they
Yeah.
can do?
We have clients that we talk to every single day and clients we don't talk to for months, right? So
Yeah,
as high touch communication wise to find out what's going on, or as low touch as you like, you own the business outright. If you want to go on and go on your little entrepreneurial venture on your Amazon store while we're building out a successful business for you, you can do that. Like you could still leverage your own store
yeah,
as long as we're aware of it and we're working on this together cohesively, where it's
yeah,
not having it's not a deterrent to the growth, right? So that's possible. We don't run ads to stores because unless it's private label, obviously that's a little bit different. I don't want to say no to that. We're a flexible company. We're not rigid. People want to get involved in certain ways. We have people who brought brands to us that have been dying, and they wanted us to bring in our business model and then hopefully revive what's going on. And we've done that before. And then we've also just said, this is a dying brand. We're not going to put our resources in this. We'll just sell through. And so those calls generally come across my desk. If it's something that is unique, myself or Jeremy or maybe Michael. But we're flexible in that sense. Some people have business ideas or stuff that is already doing well on Amazon, and they want our management to come in, run our model, but also sort of work with what we can work with them. And that is a complex case and something that we're open to.
Yeah, or I'm a chef and stuff like that, and I want to just focus on.
Yeah, we have a guy who owns a restaurant business in Manhattan. He owns, I think, a couple of successful restaurants, and he actually came to us and had already done $500,000 in revenue previously before we took over management. But he was only selling cooking supplies on his Amazon store. There's a lot more opportunity than just cooking supplies. So we took what he's selling, the success of that, we're keeping that volume moving, and we're expanding his portfolio, his product catalog on his store. So he's not narrowing himself down, and we're opening up categories. Now he's selling vacuums on his store too. Now he's also selling on Walmart with the same successful products at higher margins. And so we take a model that's working and we just make it work better,
Okay, that sounds very good. The final question. I'm an impatient. I don't want to wait 12 months for it I want to buy an existing business. So what do I go to you and say, hey, do you have I want to buy a business that's already been running? Is that recommended? Do you have these?
So yes and no. I at the end of the day, each business that opens up is open up under an individual name, right? So you're losing up an opportunity not to open up your own store regardless, right? Because it's real estate. So I recommend always leveraging your name and your address to open up at least your business on Amazon. If you want one that is accelerated, we have a whole list of stores that come across our plate weekly that are actively and non-actively selling. Some that are still active, but their inventory is out, but it has a history, the health of the store since their first sale. And those stores have wider inventory limits and can accelerate the process of growth. And then there's ones that are turning revenue. Those ones we don't come across to as often. It just depends. And there are obviously platforms for that too. You can go on Thrashia, I believe it is, and Flippa, these third-party websites where they have private label stores that are selling for the six figures. But if you just want to skip the strategical, the sort of like that building block phase, or just accelerate it a few months, we can easily source a store that can put you into a better position than you would be, and maybe turn that break-even point from 12 months to 9 months, etc. Case by case.
Yeah, exactly. Well, Will, that's amazing conversation. Thank you very much for sharing all that wealth of knowledge. I think that's a lot of people are going to be very interested in that. And if you can repeat, I'll also going to have them in the show notes, but repeat how they can reach out to you, how they can reach out to and book a call with one of your consultants.
Yeah, absolutely. It's www.ascendecom.com. That's www.ascendecom.com. A lot of stuff on that website, like I said before, publications, information about our business models, etc. And then you can book directly under 2 minutes of questions, just sort of clarify a couple of things, and a call will get booked on one of our directors' lines, short 20-minute consultation call. You can also follow us on all of our social channels, and there's just all of our stuff is very educational on our IG and stuff. So we talk about the industry, we talk about business insights. It's not just strictly Amazon or Walmart. So it's an interesting page to follow, but we also have updates about stuff that's going on in the industry that's pretty important. And so that's at Ascend_Ecom, ASCEND_ECOM for the IG handle, and just Ascend Ecom for YouTube. So you can find us on all those, and LinkedIn as well. And that's where you find us.
Well, thank you very much. I mean, it's great business. I'm really intrigued, and you might get a call from me.
Hey, it's been great. It's been great chatting with you, man. I appreciate the questions, and a pleasure.
Yeah, my pleasure.
Thank you for listening to Break Away from the Rat Race with your host, Eric Martel. If you want to share your story and experience with our listeners, please message us on Facebook at Break Away from the Rat Race. Also, please subscribe to our YouTube channel and our podcast on iTunes.